Hello dear traders and welcome to Insta TV. You're watching financial news with me, Anna Kasatkina. The euro opened the European trade on a positive note. The European trade kicked off with a rapid advance of the euro-dollar pair, which broke above the psychological level of 1.1400. Traders are keen to buy the euro in the hope of upbeat inflation data from Germany. Analysts share optimistic expectations for consumer prices in Germany. The consensus suggests that a CPI could have climbed to 1.5% in February on a yearly basis. On the opposite side of the Atlantic Ocean, the US is expected to present negative GDP data, which could confirm a slowdown in the US economy in the fourth quarter. Meanwhile, pound bulls have already priced in pessimistic forecasts on the US GDP. The pound-dollar pair came to a standstill at the key level of 1.3300, where it entered into a consolidation stage ahead of the GDP report. The Brexit news subdues the uptrend of the pound sterling. Yesterday, the UK Parliament voted for the scenario of leaving the EU without a deal that will make an adverse impact both on the sterling and the domestic economy. At the same time, lawmakers approved a delay in the Brexit term that offsets the negative effect on the British pound. One of the best performers on Forex today is the Swiss franc, a safe haven asset of the Eurozone. The reason for growing demand for the franc is the lack of positive news from the summit between the US and North Korea in Hanoi. The franc is winning favor with investors. The dollar-franc pair slumped 70 pips, hitting the lowest mark in 3.5 weeks. The pair is set to extend a decline. Besides, investors find another excuse to buy the Swiss franc in light of the news on an escalating conflict between India and Pakistan. That's all for now. Thanks for watching and stay tuned.